I think Ethereum could still, and Bitcoin could have big moves between now and year end. So, but the reason to be excited about Ethereum is Wall Street is choosing to use the blockchain for the future. That's the big change.
Exactly.
It started with stable coins, and it was a big aha moment for Wall Street. But that's just tokenizing a dollar. And now Wall Street wants to tokenize everything.
Oh, yeah.
And they're not going to build it on Bitcoin.
No.
They need a smart contract platform.
So I agree with that. So obviously securitize everything, like BlackRock's coming in, Larry Fink's talking about tokenizing the world. So originally I actually agree with you. I was like, this is super bullish Ethereum. But then they started building their own L1s, right? Like L2s I get, that's all Ethereum, which is awesome. What do you think about that though? Like, do you think that them coming in and building L1s instead of L2s on Ethereum is actually bearish ETH?
You know, people, at the end of the day, probably not. Okay. The reason being, if we tokenize the world, so gold is a $20 trillion market. Okay. And that's Bitcoin is replacing gold.
Yes.
But when you add in stocks and bonds and real estate and, you know, intellectual property and art, you're not in the trillions, you're in the quadrillion. Right? So like the market, addressable market, let's say, is 100 or 200 times bigger. You can't fit that onto one blockchain. So in other words, like you in the practical reality is like Ethereum can't be the blockchain of the entire tokenized world, because it would, you know, like if you think about the computational requirements or whatever, everything would be running on one L1. So it makes sense that people are going to try to create chains that maybe bridge and talk to each other.
Also to make money.
Yeah. But I don't think of a world where the major L1 isn't still going to be the most valuable. Like in what they call, when you look at what they call market structure, the top 2 or 3 capture the majority of the economics. And I think that's what Ethereum is going to be.
What do you think Wall Street gets wrong about Ethereum then?
What you mean, like, the person buying Ethereum, or are you talking about Wall Street, like the banks building stuff? Because it's a little different.
Why don't we go to both?
Okay.
I mean, I was thinking more from the bank's perspective, right? Because from a price action standpoint, it's not been great, right? It's probably going to do really well over time, but like, it's had a lot of trouble and struggle, I think, breaking out of its like, you know, multi-year range lately. But what do you think like Wall Street from a banking perspective gets wrong now? And then maybe we go to the personal stuff. Yeah.
Well, I don't find any conversation that I've had with the evangelists in crypto at a bank who's against Ethereum. In fact, I actually think that those folks are making a decision the way I would do procurement, which is they don't want to buy a chain that's been around for 2 years or something that brags about speed. Wall Street doesn't care about speed. They care about reliability and finality. And so I think Wall Street is choosing Ethereum correctly. I mean, I'm not sure exactly what your question is, but I would say almost every bank that's taking blockchain seriously is building on Ethereum. Tokenization is this super cycle, this 5-10 year story, which means over the next 10 years from now, Ethereum is a completely different chain than it is today, monster sized. So today's price is discounting the next 10 years, right? Like imagine you're like looking with a telescope 10 years from now. So you're looking at something 1,000 miles away and you get there.
Yeah.
That's Ethereum's future. So the discount to the future is like, it's 1,000 miles away and you just took 5 steps.
Yeah.
It's still in the future. So Ethereum's price is not about what's happening today. It's about the future. And so they shouldn't expect the price to go up every day, but they should invest in that super cycle. And I think that what people get wrong is if you're discounting the future, Ethereum at 5,000 and Ethereum at 3,000, it's still got $100,000 price in the future. And that difference in the price today is just a small variation in the discount rate. That's what people get wrong, is that they have to sit through the volatility. Or let me put it this way. If I look at either my personal wealth accumulation or my career arc or my clients, and in my 11 years, I've made some people phenomenally wealthy, like private jet wealthy, our clients. None of them made money day trading. Like I've never made any,
No.
I've never met a rich client, a friend of mine who's made money as a bear. Zero. I mean, imagine this, like someone says, how did you make your money? Guys, like I built this real estate empire, or I built, the best chain, best department store chain. You never met somebody saying like, I made money by putting people out of business or something. Like
Exactly.
no one's ever.
I know what you mean.
So, and like when I look at like my best personal investments, whether it's Bitcoin or the Mag 7, because I own I have a lot of stocks that have been 50x. They've never not had 50, 60, 70% drawdowns. And the thing that people do is they sell it when it's down, and I've just held them. I mean, Amazon was $25. Where is it? So this is pre-split. So where is
multiple splits, right?
I think Amazon must be. So these are public companies with venture-like returns, but you had to sit through the drawdowns. If there is a super cycle, you never want to sell. So you could call that permeable. I would be calling it right. If you have the conviction on the right ideas, you never want to sell the strongest ideas. We have clients that, bought a lot of Bitcoin at under 1,000 and they made 100x on something that they literally never thought about. They put 2% in. And to us, when the S&P has its drawdowns, it's never fun.
No.
But we always just tell people like, these are great companies. So if Nvidia is $86 and it was $150, is the story any different? And if it's not, they should be buying more at 86. And like, to me, is Ethereum at 3,000 somehow broken? There's nothing wrong with it. So we're glad to buy it here at these levels.
Yeah, that's interesting. I think so. What's like your wildest price call on Ethereum? Because you've made some calls, but these are boring. $7,000, $10,000. Come on.
Yeah.
Like, what's the actual like craziest call?
It
can be super long term. I'm not like.
Yeah. I mean, I just give people some framework to think about.
Yes.
Like really simple.
Yeah.
They should just have two ways to price Ethereum in their head. Okay. One is what is its price ratio to Bitcoin? That should make sense because they're like, if you think Ethereum's story is getting better than Bitcoin, like there's more excitement or things happening, then its price ratio relative to Bitcoin should go up. I mean, it's sort of like, it would be like a relative price comparison. And that price ratio in the past was like 0.08. That's the average price of Ethereum to Bitcoin. Well, if someone thinks Bitcoin gets to 200,000, which I think it will, then Ethereum, just to get to its long-term average, is like 16,000.
Yeah.
Okay, and it's like 3,000 right now. Now, if Ethereum gets to the same value as Bitcoin, the network value, that's like 250,000. Which, could Ethereum be more valuable than Bitcoin in the future? Keep in mind, OpenAI is probably, if it was a publicly traded company, would be worth $1 trillion. And it's one of 4 or 5 LLMs. OpenAI just by itself is worth 3 times Ethereum right now. Is Ethereum more valuable in relative to AI? Right, OpenAI is just one of like 8 models. And if Ethereum is the dominant L1, shouldn't that be worth
more than
a couple trillion?
Couple trillion, yeah. No.
So that's why when I say 3,000 ETH, you're getting so much future optionality. If we were having this conversation October 9th, actually crypto is doing great.
Yeah.
Bitcoin was up almost 40%.
Yeah.
Ethereum was up more than that.
Yeah, we were living a great life. October 9th.
Yeah. So now October 9th is only like 2 months ago.
Yeah, I know.
So in 8 weeks, everyone's like suddenly like thinks they're dead.
No more debasement trade for crypto, right?
Yeah. Yeah. So what happened, of course, we know is that something happened on October 10th that we're only just recovering from. Because otherwise, October 9th, if we had closed the book there, it would have been a banner year for crypto.
So what did you mean though by that? Because you went viral for that, the software book. What did you mean?
The
by
glitch.
That? Was it the glitch? Was it because of the ADLs?
So ADL was like the portfolio insurance of the 87 crash, but
Right.
ADL is not the problem.
I thought that's what happened to
Well,
market
yeah.
makers.
Correct, but the ADL was triggered by what I consider a glitch, which was that there was a price grabbed for a stable coin that was based on an internal price.
Right.
Because that stable coin broke $1.
Yeah, it did.
But it didn't break $1.
It was an attack on that stablecoin, pretty much.
Yeah, and it didn't break on other exchanges. It was just one posted price. So in other words, that's why I call it a glitch, because if the pricing was a composite and said, look, this is an aberration. Like, let's say that you were manually running liquidations and you were an ADL, okay, and you saw that this thing went to 65, so it wiped out the collateral. Yeah. But then you looked at the next exchange, it was still at $1. You would have said, hold the presses. Don't liquidate anybody. This is a glitch. It's really $1. The price is just messed up internally.
Yeah.
But because of Coda's law, that was the price, and it triggered ADL on one exchange, but then it triggered cascade liquidations everywhere else. Because you're selling you're selling positions that were in the money, but as that price falls on spot, it causes ADLs in other exchanges. That's why I think it's a glitch. But then it won't happen again. But for people who are really licking their wounds and looking around, Bitcoin is still 86 or 92, and Ethereum's at 31. That's impressive, because that's think of that as the bottom, like 2022.
And we bounced crazy, right?
And by the way, do you know that most cryptos make their low at the end of the year? Like, if you look at the bear markets of 2018 and 2022, they made their lows in November.
What have you learned from Strategy's recent plunge? Like, it's been tough for Saylor, right? Like, the stock is hit some lows. He made some announcements recently. Obviously, like usual, he catches a lot of FUD.
There's nothing he can do, because he's always going to be high beta to Bitcoin. And in the last downturn of Bitcoin, Strategy traded below NAV.
Yeah.
So
for the first time.
Yeah. So it's going to happen.
Yeah.
But it's really, how is the company prepared for that downturn? I think they're doing the smart thing. They have now announced a cash reserve of $1.4 billion. Smart. The second thing is that MicroStrategy is just tied to Bitcoin's price. That's the bottom line. Right? He's not tied to NVIDIA earnings or the business cycle. He's just tied to Bitcoin's price. And as you know, this year people thought, a lot of the OGs say we're in a 4-year cycle and Bitcoin's topped.
Yes.
Okay. Now
they've been selling Bitcoin like crazy.
Yeah. We've part of it I understand. 100,000 Bitcoin, diversify. But the part I think that's going to be different this year is that if Bitcoin makes a new high in January, there's no 4-year cycle.
Okay, so you don't believe in the 4-year cycle?
No. I think we're.
So how come it's such a thing in crypto?
Because it was true in the past that there was a 4-year cycle.
Until this cycle.
Yeah. I can also point out that if you look in the traditional equity world, do you know that there was a 4-year cycle for ISM? ISM is the manufacturing index. That had a 4-year cycle.
Interesting.
The 4-year cycle broke. It's no longer a 4-year cycle right now. And copper and gold prices used to have a 4-year cycle, and it's no longer a 4-year cycle. So if things that were reliably 4-year cycles are no longer 4-year cycles, why should Bitcoin be in a 4-year cycle? Is my So, but we'll know. So by January 31, if Bitcoin closes at above 126
by January 31st,
then there's no 4-year cycle. Our belief is that crypto is going to do really well next year, because it's not about gold and digital gold and like Bitcoin being the flagship and the alts follow that cycle. It's really about tokenization, and that tokenization wave, and that's going to cause people to own and build and get excited about new products. That's going to be very important to price next year. So I think next year is a banner year for actual crypto building and therefore crypto prices.